The views, opinions, or advice offered by this show's host do not necessarily reflect those of News Talk 780 KOH or its parent company, Cumulus Media. This is Bosma On Business with award-winning entrepreneur Mike Bosma, sponsored by Keystone CPAs. We're getting Northern Nevada back to business.
Good morning, Reno. It is Mike Bosma, your business-savvy CPA, coming to you from the KOH studio. Hey, you Garden Show listeners, you want to hang tight and hang on. Today's installment of Bosma On Business, we're going to tell you how to make your garden pay dividends. Not maybe in the kind that you are normally accustomed to, not some extra cabbage. We're going to give some cabbage in your old wallet today. Maybe some Benjis, some greenbacks. That's what we do each and every Saturday. A little business, a little entertainment, we call it Bosma On Business. Your host, Mike Bosma. Of course, yesterday just finished the September 15th filing deadline. And what an epic adventure that was. Oh, my goodness sakes. Crazy time. We're just going to share anecdotally some of that mess and why and how to avoid it. And when you get in these predicaments, how to get out. My partner out of Naples, Florida is going to talk about him saving some unfortunate prior CPA clients' bacon, how we do that through disaster relief, and then, of course, all things business. Again, one of the things that I love just doing every once in a while, you just have to get stuff off your chest. There's just been stuff percolating in the head, and it is fascinating. To say the least. So, and by that I mean, this last week on Wednesday, a prominent CPA firm in Tennessee closed its doors. Now, imagine this: if for you stragglers, you vagabonds, you people that wait till the last minute to get your CPA, your tax information, darn you! But kind of the deal there is, I got the call. I had a couple months ago. I had a couple of another CPA firm's team call me and said, "Hey, could we do some part-time work for you?" Sure, you bet. So, and I said, as long as it's okay with your boss, it's okay with me. I had never met that person individually, hadn't, but had been around the firm and had served as a technical resource to that firm for a couple years now, And so I was familiar with them, and they had a pretty heavy social media presence. So I was like, good on them, Chattanooga, Tennessee, and so when there's a team member said, hey, can we, do some work for you? There are processes we go through to, no, you're a licensed CPA, you're good people. I've been working with you for a couple of years already. So they started working part time. I'm like, okay, you bet. We call it the side hustle. The side hustle. So, but then it was interesting on Wednesday that they closed their doors, and I was like, "Oh my goodness sakes!" Imagine, you're asking your CPA, "Hey, where's my stuff? Where's my stuff? Where's my stuff?" And oh, it's almost done. It's almost done. It's almost done. And holy smokes! Then 3 days before the deadline, they say, "I'm sorry, we're not going to be able to do that work. We are closed." And the shock and awe of it all. And so that, and that's where I just want to be able to share with you, really from a consultancy perspective, how to know if you're dealing with people that, for lack of a better term, have integrity, or dealing with real, honest to goodness professionals versus, all the noise out there. So, for example, last, I guess Thursday, the 14th, the IRS said they are pausing processing employee retention tax credit claims. Now, I would say we have done hundreds of these claims, and I have reviewed dozens of other people's claims, other preparers' claims, and I'm probably going to say half-ish, at least half, maybe more, half of the people that are out, and I'd say 90% of the people that are advertising to do this stuff are complete fraudsters. It is terrible. The marketing people got their claws in this thing, and what they found was, and this is their pitch: we're going to do we won't get paid if you don't get paid. Sound familiar? And they'll say, we're going to take 10% of your refund, and that'll be our fee, 10 up to 25. I've heard as much as a third of an employee retention tax credit refund goes to the preparer. Now think of it this way. If you're taking accounting advice from a marketing person, I would ask you to recalibrate your expectations. They talk a good game. It's a good song and dance, and because it's if you get our average refund was about $200,000. So if you've got 60, 70 grand that you're going to make in fees, I mean, you can hire actors, you script it. I mean, you can put a lot of bells and whistles on that thing because you're scamming people, and the way that bakes out is. They have you self-certify that you qualify for the credit, and you don't even know you did it, right? And all that does is make it so they say, well, you said you qualified. We just calculated the amended 941s. And you can't do that. You're citing under the penalties of perjury that this is a legit thing. And so what happens is you pay, they file these amended claims. They get their fee, and then years later, the IRS has already extended the statute of limitations to audit these things. The IRS, because they hired 85,000 people to do the work, are going to look at pretty much every one. And that should scare the bejesus out of you. So that's where when we do our ERC refunds, we have basically a template that we give to our clients that says this is how you qualify for the credit. Basically, we give that to the when this is looked at, we give that to the IRS person. It's all tied out. It ties to the payroll, and that's where it's like it's been prepared and reviewed by CPAs, and there's no funny business. Right? Because we as professionals must adhere to a code of professional conduct. We did not get into public accounting to break rules, to go to jail. We don't do that stuff. We don't need to. We're very blessed. We have a great life. So we don't need to bet the farm for this mess. So that's what I was going to tell you. It's like, for the benefit of our listeners, if you are thinking of filing an employee retention credit, there's only three people that you should engage with to do that. It's a CPA, an enrolled agent, or an attorney. And I would tell you, don't trust the attorney because they don't have souls. No, the reason I would take a pause on the attorney, I have run into a couple, not a lot, a couple attorneys that are doing this work, and it is not their core competency. They're doing the work because of how lucrative it is, and they can sign a tax return. So anyway, those are things I thought, for the benefit of our listeners, a lot of business owners listen to this show, how to know if your employee retention credit is complete hogwash. Speaking of hogwash, somebody that knows how to cut through it like no other, my partner in the CPA firm, Keystone CPAs, out of Naples, Florida, Bob Marsh, talented CPA in his own right. Bob, welcome back to Bosma On Business.
Hi, Mike, and that was some good advice you gave, by the way. I've already heard some horror stories, especially with the auditing, the audits that are coming about that.
Right. So
Mike gave good advice. I would encourage our listeners to go ahead and listen to that.
Yeah, I think that's where hopefully we get this segment, some replay, and we're gonna dwell on that for a little bit, and that is, some of the fallacies that these promoters are out there hucking. So one of them is, that included in their 1/3, 25%, 10%, whatever they're selling, claim is the fact that they said we include audit defense, and if I know it's a radio show, but if you could see me, you'd see I'd be in air quotes, with my fingers, right? Audit defense. So the IRS is very clear that the only people they will talk to are CPAs, enrolled agents, and attorneys. If you do not have one of those 3 credentials, the CPA does not have to deal with you. They will not deal with you. You cannot sign a power of attorney. You're out of luck. So that's why I said, it's just like the easiest litmus test ever. Do you have CPA, enrolled agent, or attorney, Esquire, attached to your name? Because if you don't, they cannot be allowed to present any defense to that. So what that means is, and a lot of times the way they try to get out, we contract with a CPA firm or a law firm to do that work. But the person that you're contracted with, if they're not a CPA firm, then you should be worried. Like, why isn't a CPA firm contracting with me? I hire CPAs to do CPA work. And that way it's basically an empty claim to say I can do audit defense included that in my ERC claim. So when we come back, a little bit about, can somebody charge you a contingent fee for this work? You got Bob Marsh, Mike Bosma. It's Bosma on Business. Newstalk 780 KOH. Welcome back to Bosma on Business. Your host, Mike Bosma. Taking a pause out of our normal, have a business owner on, talk about their business, and talk specifically about some of the things that I'm just seeing people get completely messed up, screws up their business, halts their life type of stuff. And I just wanted to take this opportunity and just to basically give people a way to filter through the mess, okay? And spending some time in that first segment talking about employee retention tax credit. And other ways that people are soliciting you. So one of the things that is probably the biggest scam out there is people telling business owners, hey, you qualify without looking at your stuff. And one of the fraudulent claims that is out there in a big way is that you qualify for this credit no matter what happens to your sales. And they and I'm just going to read this. This is coming straight from irs.gov, their most recent announcement about this. And it just says, and this is under the heading, How Promoters Lure Victims. And they say, mistaken supply chain arguments, contrary to advice given by unscrupulous preparers, IRS legal guidance in July makes it clear that supply chain disruptions do not qualify an employer for the credit unless they are due to government order. Employers that experience supply chain disruptions qualify for the employee retention credit only if they had to suspend their business operations because their suppliers were unable to provide critical goods or materials due to a government order that caused the supplier to suspend operations. And that, it was clear to me anyway, although it took a deep read before this July notice came out to be able to triangulate that really based on one of the explanations in the notice. But that's exactly what I concluded, because I had numerous clients that were saying all these promoters are telling them they qualify for the credit. And I said, well, you did not have a significant reduction in sales. That's a 20% reduction in sales in that quarter. So and you were not subject to a government shutdown. And so and then they would say, yeah, but they said, but I had a supplier that couldn't supply, and that's why they said it worked. I go, it only works if you closed because of that. If you stayed open, then you do not qualify. And that is what the rules are. So so in fact, I had one person, we're doing a reviewed financial statement for them, and they received a $2 million credit. And I told them when they're a brand new client, they came on, I looked at that, and I said, I do not believe you qualify for the credit. Now, as CPAs, we are not obligated to amend somebody's work, right? Only if we're engaged to do so. But I do have a professional responsibility to tell you what problem you have, Mr. Business Owner. So I did do that. And then they wanted us to do a reviewed financial statement. And as I was doing that, I'm like, well, we have an employee retention credit receivable that I believe is not valid. And now I either have to say that and they got the money. So now I think, well, do I have to book a liability? They owe it back, or do I put an uncertain tax position in the financial statement, which is basically shining a bright light that we did this wrong thing. And the business owner has to have this financial statement. So I go, that's the problem, the unintended consequence, right? You're like, oh, well, maybe no, I'm not going to get audited. Hoping of not getting audited is not a reason to never a reason to do wrong things, right? You always want the truth to be your friend, not your enemy. On the phone, Bob Marsh, CPA in Naples, Florida, my business partner. Bob, do you have any thought? I see a lot of these people doing contingent fees. Any thought on if you could do a contingent fee on these refund claims?
Yeah, I mean, according to our standards, we cannot. And what bothers me is that these promoters just tell people this without any thought that you're going to hurt the client. And one of the things which you may have mentioned is that when you get an audit on this ERTC credit, the odds are you're also going to have a full audit on your books for those years.
Right.
And as you know, Mike, audits are not cheap. They're expensive. Mm-hmm. And they cause a lot of emotional strain for the client. So you always have to be thinking about that. And I don't think it's right that people can just say something, like you said, without knowing what they're talking about. And it's sad because I think it's going to hurt the people who really do need this.
Well, yeah, and I was listening to an AICPA perspective on this issue. And so, because there are some CPAs that are charging contingent fees. And it is under the auspices that you can charge a contingent fee if there's a high likelihood that a return is going to be scrutinized by the IRS. So, and I would say at least up until they stop processing these claims, that's just not true. The IRS is opined, or the AICPA, American Institute of Certified Public Accountants, has opined that that is a bogus claim, and that will be subject to censure if you're a CPA doing it. But I think just a lot of people in their zeal to make a buck are just casting a blind eye to the rules. And that's what it is. If you have anybody that is saying, I want a percentage of the refund, that is the first thing you need to say, no, thank you. And because the IRS is very specific, they don't work with those people. So that way, but you're on your own if you get, because the first thing that when you get audited for this thing, people, they're going to ask you, who sold this to you and what did you pay them? Period. And they're going to say, well, they took 10%. Like, okay, well, now we know that, and then every single return that preparer did an amended return for is going to get pulled for audit. It's just a matter of time. Like it's like playing Russian roulette with a fully loaded gun. This is not smart business. So anyway, but that's why just ways I want to give some people kind of the ABCs 1, 2, 3s how I know if my employee retention tax credit is full of malarkey, dog doo-doo, all the other bad words. And I would say what is really concerning, Bob, is there is a CPA in Reno that I had told, when we did our 2021 tax filings, we did this calculation for every single tax and business tax return we did. I said it had to be in the work papers that we looked at this because if you qualify for the employee retention tax credit, the wages that you're getting a credit for are no longer deductible. So I said it's a material item, and we cannot comply with the rules if we do not. If we deduct those wages. So we looked at it, and like I said, average refund $200,000. I mean, it was the biggest no-brainer ever. And so people are like, oh, wow, I qualified. Probably the coolest one was a restaurant. And we've done this for 2 people now. Now, a restaurant was closed, at least in the state of Nevada and most states, was closed by government order. And so my restaurant friend, whose sales went through the roof because they own a pizza shop, in COVID, everybody's ordered pizza. It's comfort food, get it to go, walk up, pick up, whatever. But the dining room was closed, and it's very clear. They qualify. They were closed by government order. They qualify for the period of time that they were closed. So she got $1 million refund and completely legit. And she didn't believe me. I'm like, and I had the memo. I said, here it is. This is why here. And I was able to explain to her satisfaction. She's also a CPA. This is what question this is from in the notice, and then this is how this applies to your fact. And I walked her through it. It goes just straight down the line. And she goes, I do qualify. I go, you do. But every taxpayer out there should be able to have a level of understanding about if they qualified, and then why they qualified, and then how much that credit is. So, and that's where I said we come back and talk about kind of an unscrupulous CPA here in town that I think is really hurting a lot of people. We come back. It's Bosma On Business. It's like 780 KOH. Welcome back to Bosma On Business. Your host, Mike Bosma. This topic of fraudulent people dealing with business owners, I am, passionate about business. It is the grease that makes our economy go. And I'll tell you, I taught a class at the Chamber of Commerce this Thursday called Bulletproofing Your Business, going through the 4 pillars of that every business owner needs to have hammered in order to have a successful business. And it just given, and I'll tell you, as a CPA, when I went to business school, I got a bachelor's in business. They didn't tell me how to run a business. They taught a lot about a business, but not how to run a business. So you have to learn from that, the great school of hard knocks. So I just business owners, man, we bleed for our business. We bleed for our employees. We bleed for our customers. And it's like, so when they get scammed, like this thing last week with Caesars and MGM getting hacked, and that just infuriates me, because it's like we work our lives to build something of value, something that is, creates jobs and opportunity for people. And then kind of in one fell swoop, some bad actor is going to come in and screw it up. And that is just, it's just I guess the reason that I think, like Keystone CPAs, we exist is to help people. So it's like the exact opposite. I never want anybody to regret ever working with me. So that's where, like, we're talking about these bad actors, the employee retention tax credit. And I said before the break, there's a CPA firm here that I am in direct communication with now. They filed a refund claim for one of my clients. And of course, I told my client, I am so excited if I was wrong. And if there's always a way, I'm your biggest fan. I'm that's why they call it practice. I'm doing the best I can. If there's a better way. But I told my client, in fairness, because she got this refund claim, and I said, well, now I need to amend your tax return. But before I amend your tax return, you're going to pay that extra tax. I want to make sure that claim was not BS. And so I said, and I think it is. I said, but you don't know now. We've got 2 CPAs argument. I said, but I'm going to send an email. I said, because if you qualify, he's going to be able to show me in the guidance why you qualify. Period. Right? And like I just read it. If you just said because everybody qualifies, the IRS says right here that doesn't work. So you show me in here why you qualify. In what methodology did that work for you? And I'm an open book. And so after 4 requests, still has not surfaced on that. Did not surprise me, because there is no argument. So that's where, if you're out there and you're concerned, send me your stuff. I'll take a look at it. I can't do it for free, but I will absolutely look at it and be, reasonable and charge you a reasonable fee to look. But I'm concerned. And if you're out there and you're thinking you need to know, because the thing is, like, one of the people that I told that they need to give this money back, I go, they're auditing these things now. I've had maybe a dozen audits in the last 20 years. I got 4 concurrent all right now. So I'm like, guess what? Those 80,000 auditors, they're trained, they're working, they're on it. So I think the audit team in Reno alone is doubled. So I'm just saying. But if you file an amended return, you get audit protection on that, and there's no penalties. Right? That's how you sidestep the penalties. You get audited, you get rung up on that, substantial understatement penalty, 25%. It's a mess. So that's what I said. It's just take a look at it. It is, you can't sidestep this one. Okay. So, and now, as I mentioned on the phone, Bob Marsh, CPA from Naples, Florida. Now, Bob, this CPA firm that I mentioned, at the beginning of the show. They shut down on Wednesday, and you and I collaborated. We wrote a memo back in August 30th, I believe the day of the memo was, that just informed impacted people in Florida regarding the hurricane that went through your neck of the woods. Give me a summary of kind of what happened and how taxpayers got some relief.
Right. So unfortunately, down in Florida, that's like the second one in a couple of years, and it's happening way too much. But that said, is that the hurricane came through on the 27th, and what you know about hurricanes doesn't affect everybody the same. You know, it could affect somebody in my county down the road a lot more than it might affect me. So what happened is that as the hurricanes went through, it affected Florida, Georgia, and South Carolina, and they're all a little bit different. So generally, if you had like a corporate return, LLC return, they were going to be due on 9/15. Those are now extended until February 15th of 24, and then your normal individual tax return is due October 15th. That's also been extended as well into February.
Now, what about?
You got to be careful because there's also some. I'm sorry. Go ahead.
I was going to say, now, what about estimated tax payments? We had a third quarter estimated tax payment that was due yesterday on the 15th. Yeah. What about that?
Yeah, that is also going to be due. Well, that's going to be due on January 16th of 24. So it's a little different with that. So you got to make sure that that's paid. As I said, you got to look at your state too. See, so each state could be a little bit different.
Right.
So you have that, and also too, as far as your payroll taxes as well, they are also expended until January as well too.
Yeah, well, actually,
but it's best that you get advice.
Right, get advice, because I think what I recall, I'm going off of memory here, which I should not do. You had to pay you could be late on your payroll taxes, but they had to be paid in, and I believe in September, in order not to be subject to the penalty. But anyway, take a look at it. We have the memo. Right, I can send it to you. But what I want to do, it's this interesting deal. So also the CPA firm closes on Wednesday, 3 days before the due date. Now, you know, that was in Tennessee, which was not impacted by the hurricane. You know, is there a fact pattern that somebody might be able to take advantage of the delay in filing their tax return? If is there a way to take advantage of that, even though you don't live or have a business in Florida?
Yes. So let's say your tax preparer or your CPA lives in one of those disaster areas, then you are also exempted as well too.
Right.
You know, that's another exemption as well.
Yeah, and so because there's a provision in the disaster relief that says or are impacted. I had a fascinating situation, which really got me into the weeds on this stuff. We're fortunate in the great state of Nevada, we don't have a lot of this tomfoolery, but in other states, we're just not so fortunate. So, and when the California had the floods earlier this year, I did a deep dive into, because that was a lot more proximate to a lot of my clients. And like, oh, well, this is or are impacted, which is more of facts and circumstances. A couple examples, but it's pretty broad. And I thought, well, gosh, if is there an argument to say if your preparer, do your taxes impacted, could you get a pass on that? And I believe the answer is yes. Now, for the people that no, and we didn't rely on that. We just told people to file their taxes on time because it's right. A little bit of a stretch, and the IRS may disagree with it. But for the people that had their CPA firm shut down 3 days before the deadline, I said, there's you I believe will qualify for relief from penalties for late filing these tax returns because there's no way to get them filed in 3 days. I said you qualify for relief under the reasonable cause exception, but that is a facts and circumstance. So that means you got to write do a power of attorney, write the letter, get back and forth, or you get the power of attorney, call. This is what happened, and usually, or there's also the first time abate program. Hey, I've never been late before. Give me a break. So. But all of that takes time, and when it takes time, it costs you money. And I said, well, I think if we qualify under the disaster relief, it's automatic. So we put you on the list, then there's no automatic notice that comes to you that you're late. And I think that resonated with some people to say, okay, and I told the owner of the CPA firm, I just said, at first I just told him, I'm sorry. I have no idea what happened in your world to have you close your doors. I can only imagine, when the firm's got your name on it and it closes, my heart just breaks for you. I don't know what happened. Don't want to know. Don't want to get involved. But we're reaching out to those team members and saying, hey, why don't you come into under the Keystone umbrella? We've got great clients and our staff are all over the place already. So that's the being in Tennessee is not a big deal. It'd be great to have somebody in your time zone. That's why I brought Bob on. But it was interesting to hear what a lot of the feedback was from both the employees and the clients about how they ran their business, and it just really was concerning. Again, I'm talking with Bob Marsh from Naples, Florida. We think there's a provision, hire Keystone out of Naples to get your stuff done, and you might be able to make a difficult penalty waiver easy. Really, that's all that it amounts to. But more importantly, is there was significant discussion. So this firm was doing some pretty shady activities, and I say that I read a Reddit thread on it, and I was just I was like, man, like there was one person on this Reddit thread that said, I worked there for a day, saw what they were doing, quit, and turned them into the IRS. So if you have that, there is nothing that we do in CPA land, people, that you should not, as a business owner, be able to understand, get your mind around, right, and show me that this is legit. Period. Right. And then it's also fair to ask your professional service provider, how are you getting compensated for this solution? Right? I mean, just that's a completely fair question. And because if a lot of times, whenever life insurance agents are involved, anybody who's not Brian Wheeler, because Brian Wheeler is completely legit. I just threw all the life insurance agents under the bus. I should say I know a lot of quality people out there, so I retract that statement. But there are some unscrupulous actors that they get a big commission if they write you a life insurance policy. Brian Wheeler for Keystone Wealth Advisors, he's a rock star. But what I have when people are sold these policies, I have Brian look at them and tell them, well, if was there a better way to write this policy? And usually what that means is, does it have the hooks or the clawbacks or the penalties, prepayment penalties, early withdrawal penalties, all that stuff, if you cancel the program? And he said, yeah, they just made it way too restrictive. So that's what I mean. It's just so many quality people out there. But I'll tell you what, business owner, you trust your gut. If there's something that's too good to be true, it probably is. And if, and it's just, especially now in this environment, the audit environment has changed, and you have to you protect you. And that's what I'm passionate about, making sure businesses are taken care of. So when we come back, Bob Marsh, Mike Bosma, we're going to tell you the number one thing you need to know before you hire that consultant. It's Bosma On Business, Newstalk 780, KOH. Welcome back to Bosma On Business. Your host, Mike Bosma. It's gets my dander up when business owners are, being bombarded with, BS solicitations, in my corner of the world, in this case, employer retention tax credit. But, one of the things that I would just offer up, if you've got some employer retention tax credit and you're just maybe now concerned, 775-786-4900, mbosma at keystone.cpa, mbosma at keystone.cpa. I can tell you in about a second. I can tell you pretty quick. If you send me what they gave you or what you gave them, it takes a fairly short amount of time to see if you qualify, and it really depends on the business. So, and like I mentioned before the break, if they're only filing one amended 941 for multiple quarters of employee retention tax credit, that's wrong. So they have to do it by quarter. It doesn't work that way. So, but if you're seeing something in Bosma at keystone.cpa, we'll take a look at it. On the phone, Bob Marsh from Naples, Florida. Bob, we always leave our listeners with that number one thing, that big aha, that big takeaway. So, in tax land, how can people get smart right now?
With regards to the ERTC?
Yep.
Okay. Well, number one, if you get a phone call and it sounds too good to be true, it could be too good to be true because half the cases don't qualify. So don't take the word of anybody trying to sell you anything. Find a good CPA who knows what they're doing, someone you can trust, and get the right answer. Because, as I said earlier, not only may you have to give it back if you get it, but you may also cause another audit on your business,
right?
Which becomes very, very expensive.
We call it collateral damage. No, absolutely true. So,
yes.
Yeah, and I would say, Bob, when I look at these things, I tell people, you don't need to be an expert at this stuff. I had a fairly sophisticated estate plan that we rolled out, and it had, the standard stuff: self-settled spendthrift trust. It had intentionally defective grantor trust. All this stuff, right? And I remember the owner was going to start a gifting strategy, and I said, "Hold on, I got to write the memo." So I wrote him the memo. It was an 8-page memo about all this stuff, and it took time. It was hard for me to write because it's very technical, but I have to explain it in a way that is received by the person that needs to make these decisions. So that's my job, to run interference on that. And I met with him and his family, and I said, okay, these are the things that I'm recommending we talk about. And I was thinking, because it was a relatively expensive memo because it took a long time, and I was thinking, well, he could, fire me because he may not want to pay those fees to do that. And I just said, it would be malpractice if I didn't tell you these things, right? Because then you pass away, and then all of a sudden your kids are like, well, how come you didn't take advantage of all these things? Or now we have an estate tax that we wouldn't have had you told us, right? So that's that trigger in my mind. So, so my number one thing, my big aha, my big takeaway is make the person who's providing those services explain it to your understanding. That is their job. And if they're like, well, that's just how it is, that means they don't understand it. And it is funny. I was talking to all these CPAs in Chattanooga, Tennessee, all these clients, and they're like, well, is this okay? Is this? And I was like, and Bob on the phone, same way. He's like, well, I will tell you what the rules are, and then we'll help you decide if you fit the rules. We follow, we administrate the rules. Our what we do is we help people comply with their filing obligations, and it's complicated. So it's like if somebody hasn't taken the time or the rigor to figure out what the real rules are, I probably should be working for a larger firm that have people that can help them. Speaking of help,
and it's expensive,
and it's actually probably that's a good point, Bob. I think one of the way that I think most people are underserved or misserved from a professional service provider of any ilk. I mentioned the chamber program that we're doing now. Bulletproofing your business, and we got another one second Thursday of every month. The next one's October. Second Thursday of October, 8:30 to 10. We're talking about the people. How do you riddle the people part of your business? And then, but that's where, and by and large, we all, every business owner starts with usually whoever the business owner is, and then their spouse doing the books, and then I can do the tax returns, and then they hire somebody, but then it's maybe hiring somebody that is, they take off their Walmart apron and then go in the kiosk at Walmart and prepare taxes. And that's just data manipulation. That's not somebody that understands the tax law, that can explain it to your understanding. And so ultimately, if you've not paid, to have a professional look at your stuff, oftentimes you don't know what risk you have. So that's my thing. Okay, speaking of that thing, next week, Two Chicks, Haley and Jesse from Two Chicks are going to be on the show, talk about, they just closed a restaurant, and talk about their other restaurants that are going and the ebbs and flows and ups and downs and sideways of being a business owner in this COVID craze, post-COVID craze. And then, of course, I'll weigh in with advice, tips, and tricks. Bob, thank you so much for weighing in. Until next week, you business owners, keep your business engine humming. It's Bosma On Business, News Talk 780, KOH.
On air, online, on demand. News Talk 780, KOH.